It's a little close, isn't it? Well, this is just like meeting at Pee Wee's. We're just waiting on everybody to get here. Except I can't ask Tennessee to get me some coffee and an omelet. I just got here. Oh no. What up, Timeline?
Hey, can you hear me?
I can.
Man, I'm learning something new this morning. Kind of cool.
I'm hoping other people join, but if not, we'll continue our phone conversation live. And that's breakfast bourbon. Look at that. I love it. That's yummy.
The big one.
I went to the liquor store the other day, and I saw that, which I love, but I've been trying to get some new things just to try them.
Yeah. What'd you go with?
Well, I found a bottle of the Quarter Horse, which I tried 2 years ago, and my palate has certainly grown in the last couple of years.
Yeah.
It's good, but it's real sweet and light. It'd almost be better to mix with like a Sprite or something. It's really good, but it's not the best sipping whiskey, I guess you'd say.
Okay.
And then I picked up a bottle of a 10-year-old Bullet on sale. It was good.
Bullet.
Yeah, the 10-year. And then they also, the prior week, I got a bottle of barrel strength Bullet.
Yeah.
You got to be careful with that, though.
Barrel strength. Huh.
It's 125.4 proof.
Probably vary as an oaky and barrel, big time, you know?
Yeah, a lot of vanilla, a lot of burnt caramel. It's delicious. I mean, it's really good. It's so good that you drink enough of it, and then you go to stand up and go, oh, that is 126 proof. Oh, shit, that's strong.
Does it burn going down?
Yeah, but not as bad as you'd think. Not like a moonshine burn. It leaves such a nice flavor on your palate that it's not bad at all.
Any communications from Frank in New York or New Jersey?
He had texted me or emailed me on Friday.
Yeah.
Wanting me to get some information, and I can't do it. The problem, he's wanting information that he thinks we have, and the truth is, A, we don't have it.
Yeah.
And B, we can't pursue it because he owes us so much money.
Yeah.
So I keep telling him to call me. I'm hoping we don't have to fire him, but you know,
he might be an example on this call of I had a lender in place and I may not have that same lender in place, or any lender for that matter, as of today. That's a prime example of these products are changing drastically and quickly.
Yeah, so I'll tell you what, I mean, I don't know if anybody else is going to get in here, and this is being recorded, and I probably shouldn't, I don't know if he said his both first and last name or not, but we should talk about that as far as what's happening in the marketplace, specifically as far as lending goes, and we'll start with the commercial, and then I'll ask you about residential, because most people know I don't do much of that. But what have you heard? I mean, we talked briefly earlier. What is happening with the line of credit and the non-QM loans that we were doing?
So the fix and flip line of credit that I've been talking about for 6-9 months, thereabout, middle of last year. I was on a call Friday with the lender, which is Finance of America Commercial Division. And they're still originating these loans. They're still closing these loans. That's the good news. Quote, we're still standing where others, are not. That's kind of how they ended it. But specifically to my, 10 or 12 clients, I've had conversations with most of them as of yesterday. And the two major changes that they have made is reducing the loan to cost by 5% for everybody. So if a client had a 90% loan, they now have an 85% loan and such forth.
Well, let me ask you that. Hold on, before you go, just for clarification. If they had a 90% loan, do they have to come up with that money to make it an 85% loan, or just the new loans going forward will be 85%?
If a loan is not cleared to close as of yesterday, it will be affected 5% less.
Gotcha. That makes sense.
Now, some of my conversations looked like this yesterday. So a way to work with that is if you thought your rehab budget was $100,000, maybe now it's $110,000 or $105,000 because they're making the loan based on your rehab budget that gets approved.
Sure.
So that's kind of a way to work with that.
Gotcha.
Most of my clients weren't, it wasn't like the, okay, I'm not doing this anymore. It was, let's figure out a way to do it.
Well, that part doesn't seem like the end of the world, but what'd you say happened to the interest rate?
Yeah. So then number two was they increased all interest rates by 2.5%. So my lowest rate out there to date was 7.25. So they are now at what, 9.75?
Right.
Still under 10%. And let me make a few bullet points, to any of the investors or anyone that cares, but this is still a no documentation loan, meaning specifically we're not asking for 2 or 3 years tax returns.
Right.
We're not asking for W-2s and paycheck stubs. So no income documents. That's huge.
Right.
And then second of all, these are, investment property, not primary residence. Buy it, rehab it, and sell it, short-term loans.
So speaking to that, what are you seeing on the other side as far as, so we have the client who does the fix and flip, and now it's time to sell to whomever. They've either got to refinance or have to sell it to the next person. Are you seeing anything on the residential loan side change at all yet, or is that still the same?
So let me just push that to the side for 2 more minutes, and then let me go back to where we were, the line of credit fix and flip. The third change was they've extended the 12 months term to 18 months. I guess the rationale there is things are going to take longer, period, So they've extended that from 12 to 18 months. I think there's a benefit there, right?
Yeah.
Potentially.
Sure.
I mean, I don't know. Again, I've been around fix and flip now for a year, personally, professionally. And, I'm seeing houses that you buy and rehab and sell, 3 to 6 months probably being the norm. In the past year. Maybe that goes out by 3 months moving forward. I don't know.
Right.
But they're pretty smart people. Blackstone is behind this.
Sure.
So they've extended it, out to 18 months. So that's the 3 changes that particular lender has made to that particular product, by the way.
Right.
They have a multitude of products.
Sure. So, I mean, and the obvious thing to note here, and we could go through all the products, and that might be for a different, we could do that in a podcast version or another version of this. But
this is coffee, by the way. This is not that basil.
Guinness coffee. Oh, sure. Bourbon and Guinness for breakfast. You must be Irish.
Yeah, I am. But no, I don't start drinking normally till at least 5, typically.
Well, okay.
But we are in some uncharted waters, apparently.
Yeah. So going back to the question, what's happening on the residential side?
Okay, got it.
Or, somebody wants to buy a house, or somebody wants to buy the fixing, I have fixed and flipped the house. I'm ready to sell it. What are the current? Is anything happening in the mortgage world that we should know about?
Yeah, a lot. So let me try to break it down from interest rates to processing and underwriting times, and maybe like third-party vendors that we rely on to get loans approved and closed. How about that?
Perfect.
The interest rates are extremely volatile for about the past month, call it. It might be 5 weeks, it might be 3 weeks, but lately, pretty much all of March.
Right.
A month ago, I was talking to people about a 3.5% interest rate. Today, the conversation's more like 4.25. Okay, so interest rates are up 50 to 100 basis points, depending on a lot of things, but loan type, are we talking conventional, are we talking government?
Right.
Credit score, is it a 620 FICO or an 820 FICO? Is this 3.5% down or is this 20% down? So, all these different things actually make up what the interest rate offer would be today.
Sure.
But I can tell you they're up. They're not 0% like we saw on Facebook and social media and on the news 2 weeks ago.
Right, and that's what I think people don't understand. The Fed dropped the rate to 0, so everybody thought the loan interest rates were going to go down.
Yeah.
And that doesn't necessarily correlate that way.
I took, I don't know, 10 or 15 texts, emails, and phone calls that week. And I know a lot of my friend loan officers that I talk with on a regular basis fielded many, many calls about that 0% interest rate thing. Maybe you can talk about that, Jim. What, tell the audience, what does that really mean? What happened when they went to 0%?
You know what? That's so that would be a little above my pay grade. But basically, all they did was stabilize the financial markets in a realm that we don't play in.
Yeah.
That affected 2% of the population.
Those are short-term rates at bank charge banks,
Right.
overnight funds, basically.
Yeah, but it's not something we on this level, we don't
Right.
see that. I mean,
Right.
It's just not something, we don't feel the effects of that unless they stay there for an extended period of time.
Yeah.
If they stay 0 for the next quarter,
Yeah.
then rates will come down.
From a credit perspective, that 0% that we're talking about is really more for, like, what I just said, but
Right.
Credit cards,
Bank to bank
automobile
stuff.
loans, short-term type loans, not the residential, 30-year fixed interest rate mortgage loan, basically.
No, because that's not the same.
Yeah.
It's just different money.
Yeah. Yeah. So, rates are extremely volatile. My company this past week, there were several days where they make adjustments throughout the course of a business day. They may have opened up at 11 a.m. at 375, and by the end of business, it could have changed 3 times up and down. I mean, they're all over the board at every bank, at every mortgage company. There were a couple of days recently where my company said, we're not accepting rate locks right now. Okay, there's too much uncertainty in the secondary market.
Is so that's coming from Freddie Mae and Fannie Mac, basically?
Well, I'm speaking to our secondary pricing department that manages and hedges rates and funds on a big scale. But again, when there's that volatility, it makes it difficult to price accordingly.
So let me think. If I'm not mistaken, and we publish this, and if I'm wrong, somebody I'm sure will jump in and correct me. It's typically based on like the 10-year T-note.
Yeah, I mean, 30-year, mortgage interest rates in general follow that pretty closely. Yeah. But again, it's not a certainty.
No. But everything is, so the volatility, and so when you start talking about treasury notes, this is where you're getting into volatility, because treasury notes they're just not secure right now.
Right. A lot of volatility, a lot of uncertainty. The financial markets in general are they're all over the place.
So think about it in terms. So I did a little video, I don't know, a couple months ago.
Yeah.
I'm dropping stuff trying to find this book. So
hey, can I pause for 1 second and take this very important 30-second call?
Yes.
Will that be okay? It's one of my contractors going out to my house in Dayton to.
Go ahead, take it, because I'm going to drink of water. I'm going to pause.
Is there a mute
I got
function?
I got
it.
You got it?
Yep. Okay. Quickly. turnaround times, loan origination, loan processing, loan underwriting, loan closing. That's kind of the 4 milestones from a generic 30,000 foot view in the residential world of mortgages. So everything is going to probably be slower. I don't, again, talk to 100 different loan officers and you might hear 100 different things, but the reality of it is, if we're quoting 21 days from contract to close last month or 3 months ago, I think the conversation with buyers, agents, sellers, all parties is maybe we should go back to, 45 to 60 days being the new norm for now. Okay. Yeah. For now. So that's the conversations I'm having about turnaround times is let's write these contracts for 45, even 60 days right now. Courthouses are closed or semi-closed. It makes it tough on title companies to get examinations, for the underwriter to issue title insurance potentially. How do we get mortgages, filed at the courthouse, and you've got a requirement to get those documents recorded in a very timely fashion. I think 24 to 48 hours is probably the norm, the expectation. And now that it's not possible. So,
right.
Appraisers are not taking jobs. The homeowner that is selling a house or refinancing a house is not allowing appraisers to come into their home. That's a problem.
That's a significant problem. You can go somewhere for a couple of hours.
So title, appraisals, and probably the third, and I'm not sure what order, but they're all very important to us getting loans cleared to close, is verifying someone's employment. So, if you've got a closing tomorrow, the lender is now required, today or yesterday, within 24 to 48 hours to call the employer and verify that this person still works there. People are getting laid off, furloughed.
So what about people who are in a temporary position, like they're temporarily have to be at home, they just can't buy anymore?
No, I'm not going to say that. What I'm specifically talking about right now is we as a lender, we have to call and verify their employment. So we got to get a hold of somebody, whether it be their manager, HR, the owner of the company. Somebody physically, other than the applicant, has to really verify that they still work there as of yesterday or today to close tomorrow. But so that's becoming challenging.
Yeah, but I'm saying if they get a hold of that manager and say that person is temporarily not working because of the virus.
Yeah.
Are they considered employed or unemployed?
Well, okay, so I'd have to ask a few more questions probably. Will they still get a paycheck every Friday in your scenario?
No.
No loan.
So that's because that's what a lot of these companies are doing is they're telling people to go home and they're putting them on unemployment. They're saying, look, you're temporarily out of a job, but in order for you to continue to receive any income, we have to make you unemployed so you get an unemployment check.
In my 26 years of mortgage, my answer today is no loan. We don't accept unemployment as an acceptable source of income on residential mortgage loans.
Right, and I would
either employed or you're not. If you're not employed, you're not getting a loan.
I just didn't know what they were doing, if they made any kind of exception for this whole coronavirus thing.
I haven't heard of that happening as of yesterday or today. So. All right, so we dug into interest rates. We dug into turnaround times. I guess product would be the third one. On the residential side, getting out of the commercial conversation, I've not really heard of any changes with conventional loans, which is Fannie Freddie. I've not heard of any changes with FHA, VA, or USDA, which are government loans. In terms of product, I've not heard of any changes as of yesterday. It's business as usual. Just again, the expectation has to be set for all parties that things are going to take a little bit longer than what they have been. So have those conversations, with your people.
So right now, if your primary source, if you were in the middle of buying a house and your primary source of income was you worked at a restaurant, you're screwed.
Yep.
Uh,
Yep.
Hairstyle, if you're a hair salon owner, if you're a chiropractor, massage therapist, basically in any of those small self-employed groups or even employed groups, you just happen to work in an industry, the movie theaters,
Gym owner,
yeah, anything like that.
gyms. Yeah, anything. Yeah.
You be shut down.
So I would speculate, is that the right word? I think that, buying and selling right now is going to be impacted, probably not in a positive manner, but somewhat of a negative manner for the time being.
Right.
Wouldn't you?
Oh yeah. It makes perfect sense to me.
I've got a house that I'm turning right now that you're aware of. It's out in Latonia. We sold that 3 weeks ago, maybe 4 weeks ago.
Mhm.
And the buyer is getting a conventional mortgage with one of my competitors. Doesn't matter who it is, but um, I called to get an update yesterday, and they're saying, well, coronavirus slowdowns. The appraisal hasn't been done yet. It's going to be done like tomorrow, which is about a week late. So they basically said we're probably going to need to get an extension of at least 7 days. So instead of closing at the end of March, it looks like my house will maybe close the first 7 days of April.
We
And,
had
and that's assuming, okay, now I'm doing this because I'm the seller. I want to close.
mhm.
They don't lose their job.
We're doing the same thing on that house out on Owl Overlook. We're out there in Burlington. What is that? Burlington. It's the appraisal was done on the 16th.
Yeah,
We haven't heard anything since.
don't have the report back. Yeah, the
No.
inspection was done, but still don't have the report. If I'm hearing you correctly, yeah.
So it sounds like because we're not getting any feedback at all.
There's so many things in residential lending that can derail a loan closing, and in perfect environment, it's challenging.
Right.
So it's really challenging right now.
Be a
But
matter of holding it together. So as far as I guess from your perspective as a mortgage broker, well, and you started leaning a lot into the commercial stuff. So I assume you're still going to I don't want to say business as usual, just business modified.
yeah, I just want to clarify that because it can be confusing to realtors or consumers or my friends that are loan officers in just the residential space. But when you say commercial, I think sometimes people think about financing, Great American Ballpark or Charlie's Restaurant or Mike's Car Wash. That's really not the type of commercial loans that I'm originating. It's more of 1 to 4 unit investment properties,
Hmm.
5 to 20 unit multifamily,
Hmm.
multi-unit transactions. So it's all residential
Sure.
lending. Okay,
Right.
that's really my niche, and I
Sure.
started doing that 9 months ago, if you will. So
Mhm.
it's business as usual as far as I'm concerned, but it appears that it's going to be challenging getting loans. Um, these lenders, non-QM is a term you'll hear about, non-qualified mortgage, so not agency financing, right? Your your quasi, hard money lenders, your institutional lenders. Um, you know, I've gotten 3 emails and 3 phone calls since yesterday with these lenders I'm approved with, such as Finance of America Commercial, and they're all making changes. Lima, One Capital, Silver Hill, Velocity, Angel Oak. Those are some company names that are either they've suspended originations. Several of those have actually suspended all loan operations as of yesterday or Friday.
Really?
Not taking on new business. The capital markets are drying up. So, and then, again, like we talked about earlier, things like we're increasing the FICO score requirements from 620 to now 680. So they're looking for a higher quality borrower, right? They're reducing loan to values by 5 to 10%. They're making a lot of changes. So it's going to be more difficult to get loans for people is what I'm saying to you. So I don't know what impact that will have ultimately, other than maybe less transactions for a while.
Time to get creative again.
Yeah. One of the lenders I just mentioned, in fact, they were doing multi-family 5 to 20 unit lending. Well, as of yesterday, and I kind of alluded to that before we started recording this, Frank, your referral to me, I believe that was a 20 unit property. Well, this lender says we're no longer lending on 5 to 20 units. We're done.
Sure.
We're back to 1 to 4 only. And by the way, our credit score requirement has went from 620 to 680. And by the way, that 90% loan that we talked about is now 80. So those are the types of changes that are going to negatively impact production.
Yeah, I would.
These are big companies. These are, national companies that rely on the capital markets to fund transactions such as this. Again, non-QM, non-qualified mortgages is having the biggest negative impact that I can see so far.
Well, I can see that.
But that of the whole space, the whole residential space, I mean, non-QM might make up 5% or less, probably. Again, I'm not quoting that. That's an educated guess, but it's not a big part of the residential world.
Right, but in the residential world, FHA is a huge player. VA is a pretty significant size player. And then, of course, just your conventional Fannie Freddie loans. Those are all the, that's it, in USDA. So
well, that's your primary residence mainly. Right. That's your owner-occupied.
Right, but
traditional mortgages are fine.
But where those folks are going to get affected are basically job verification and length of time to close.
Mm-hmm.
Those are going to be, and their interest rates are up, of course, but
yeah,
the operational portion, it seems, is that somebody right now is just, the pool of buyers has drastically changed because you have a huge pool of people who are no longer working.
Another way of saying what you just said, from my perspective, talking again about loans, is separate the residential and the commercial in this conversation. And
sure.
The biggest negative impact for my client base and my referral partners like you right now are the investor loans.
Right.
Period. So I've got friends or acquaintances that own 30 rentals right now, and they're scared to death. How are their tenants going to pay rent next week? How am I going to make my mortgage payments if I don't collect rent?
Right.
So really, I don't have all the answers, but that's what I'm seeing. That's what I'm hearing. That's what I'm reading.
I can tell you from a property management standpoint, because we just took on another huge portfolio. So we're over 400 units now. We're close to 450. What we've told the tenants is, look, if this has affected you and you can't work, and we know a few.
Yeah.
If you're not going to be able to pay your rent, you need to get in touch with us, because you got to pay something. It can't be zero. Right. And part of the reason we're doing that, I know that seems harsh, but even if the government suspends people from having to pay rent, that doesn't mean they're not ever going to have to pay it.
Sure.
So the thing you got to look at is, how are they legally obligated to pay that? You have a 1-year lease, right?
Yeah.
And your 1-year lease is up. How long do I have to make that rent back up? Now, if your rent's, say you're paying $900 a month rent, you miss a month, so you can spread that out. If you got 3 months left on your lease, you can add $300 a month to your rent, or however you got left on your lease is how long. That's all the length of time you have to
pay in full, basically.
To pay up your lease.
Yeah.
And that's what people aren't going to understand. and they have to know the math. So if you've got somebody that's like 2 months left on their lease, they don't just get not pay. They still owe you that money even when the lease is up.
Same thing with mortgages. Very similar
Right.
conversation. I mean, our mortgage companies are the people known as the servicers, collecting payments, administering the escrow accounts, et cetera.
Right.
Are they gonna let me? I have a mortgage on this house I'm in, talking to you. Are they gonna let me not pay next month? Are they not gonna, 3 months? Is it a year? What happens with that deferment or that forbearance, or same
So
conversation?
right. The only difference, the mortgage company has the advantage that they
You have a
can,
mortgage.
well, what they can do is just put your payment on the end. So you have 360 payments. They'll say, well, you owe 360 payments.
Sure.
If you skip a month, you still owe it. So it might go out a little.
So maybe it's 361 to repay it, or 362 to repay it, whatever. Right.
Correct.
I think that's known as forbearance. I think
Yeah.
that's the legal term.
The problem you have, though, with a lease is you don't necessarily have that right in the lease. You have to
After
fix
12
that.
months, you're up.
Right. So
Okay.
you've got to collect your money during the term of that lease, or they have to sign a new lease. And at the end of that lease, you say, so your rent's 900, but you've got to extend that lease long enough to pay me what you owe me for not paying. And that's where the math gets a little tricky, because there is no forgiveness. You don't get to just not pay. It doesn't work like that.
And again, same with mortgage. You don't
Right.
just not, communication is what we all need to be doing with our creditors.
Right.
Don't hide, don't duck them. This is way bigger than you and I. It's
right. I'm just paying. I'm gonna pay mine, and hell, as long as I can, I will.
I'm not technically self-employed. I'm a licensed loan officer working for Polaris,
Right.
doing residential loans, right?
But you're
But I'm
1099,
commission,
aren't you?
but I'm commission based. No, I'm W-2'd with Polaris, so I'm an
Are you?
employee.
That's
But my point I'm trying to make is, my pay is zero. I'm not on salary. I'm not on hourly.
right.
I get paid a commission when a deal closes and funds.
Right.
So from that perspective, it's like I'm a small business owner.
Right.
I'm impacted.
Very much.
If I don't close loans in April, May, or June, my income is zero.
Oh, I got you. I got to close.
Yeah.
I'm in the same boat.
So, I'm looking at my, 4 mortgages that I currently have, and I'm going to apply whatever assistance lenders and the government ultimately, puts out there for people, because I'm going to need it also.
Well, absolutely, and you should. You absolutely should. I think the one, so I did have a bit of an advantage, because I was planning on being shut down for the next 6 to 12 weeks, because my surgery was supposed to be in 2 days, and I was going to be down. So I've been trying to get myself in a position to where if I knew I wasn't going to be able to work for at least 2 to 4 weeks, and they said up to as many as 12. So I thought, well, I'll get myself situated so the month of April is covered. So, and I had April and May covered, so I'm doing okay. I have those bills covered anyway. So I was planning on it, which is great, but then it goes back to what they always tell people, and you just never really do it until the situation arises where
Have like a year's worth of reserves, or whatever,
6 months
6
or a year's
months,
worth
or
of reserves saved up somewhere.
yeah.
Now you're really feeling it. And
Right.
I'm seeing it firsthand from the other side. I'm not on the side of I'm in shit, because last time this happened, I was in the shit. Like, I
Yeah.
knew it was going to happen. I just wasn't. It happened sooner than I could predict.
Yeah.
This seems to be going down, almost a little too close to the way I've foreseen it to happen.
Well, you got to have reserves. I mean, again, mortgage lenders, on most loans, they want to see that after closing, you have 2 months or 3 months or maybe 6 months, maybe even 12 months. Again, it depends on the loan type, but the point is, lenders are pretty smart. Insurance companies are pretty smart. They seem to make money. you know, regardless of the economy and what's happening. But the point is this: you should always prepare to have, 2 to 6 months set aside for emergencies, if you will, pandemics that we couldn't see.
Right. The grain of sand.
Yeah. Yeah.
That grain of sand that we never know what it is. I totally agree.
So go ahead. Go ahead.
No, I think actually this could have been a good podcast. Some other people would be sorry they didn't come. We'll try to get everybody to share this so that next week hopefully we can have more people on and kind of talk about and see where we are. Because
so you can take this recorded video and email it or text it or share it, right?
Yeah, I plan to share it everywhere.
All the people we work with, and whether it's a consumer or a realtor or
yeah,
we have a nice team established, you and I and many of others on that team.
Oh, yeah.
And they need to hear this, I think.
Yeah, and hopefully, ideally next week, some other portions of the group that are normally meet, like Matt especially, and some of the other folks.
Yeah.
We might have to get Amy or somebody to run out to Matt's house and set up his phone or laptop to be on this.
Yeah. Technology.
For the technically challenged.
I'm a hybrid. At 50, it's like, okay. I've heard of Zoom a lot. I've been on Zoom calls as a guest, as a participant, but I've never hosted one yet. I'm still old school. I asked everybody to come to my office and do a face-to-face lunch and learn, of course.
If I didn't think
cool.
If I didn't think we would get so much flashback, we'd just meet for breakfast here.
Hey, the news says we might get fined, we might go to jail,
That's Ohio. Those Ohio people, they're crazy anyway.
So
no, now there's a rumor that Trump's like, you know what, if the politicians, if the House and Senate can't get their shit together to enact the relief bill,
yeah,
this is gonna be like, screw it, go back to work.
Yeah. Well, I want to make one last point about a conversation a few minutes ago about me or whoever, and hopefully it's helpful. But again, those 4 mortgages, and my car loans, I've got 2 of those, and I've got some credit card debt, the American way, flipping houses, etc. But anyway, if my creditors say, okay, Tony, you can not pay us for a month or 3, but you still owe us, we're just going to put it into your payment, or we're going to put it at the end of the term, whatever the case may be, I'm going to take a good hard look at that, assuming there's not credit report, late payments. Be careful with that, by the way.
Right.
Make sure you're having these conversations with your creditors about, okay, if I don't make a payment, is it going to negatively impact my credit report, my credit score? And I don't think this time that's going to happen. From what I'm reading, it should be fine. But be aware of that. You don't want to hurt your credit through all this.
Right.
And then it's, I don't want late fees. I don't want penalties. So have those conversations about those 3 things specifically. If I don't pay you, what happens? And understand it, and then make an educated decision. But my 11 bills that I got to pay next month, they might be $3,000.
Right.
If I can defer that or put it off for a month or 3, I'm probably going to do it, because cash is king, right?
Yeah.
I'd rather keep that in my hands than paying those bills if I don't have to. So, food for thought there, Jim.
Absolutely. Cool, man. That was great information, Tone Loan.
Well, thank you. What's this?
I enjoyed it. Yeah, we'll do a podcast together. Want a home loan? Now you need it. Now you need one that says want a line of credit.
Exactly.
I'll put this out. I'll put this out everywhere, and then we'll get our podcast together maybe later this week.
Okay. Cool. Well, thanks for hosting this and participating with me for the last 45 minutes thereabouts, and we'll talk soon.
Absolutely. Thanks, brother. I'll see you.
Okay. Bye.